Hey guys, so welcome back to the channel. Today I have another trading strategy which I'm going to backtest for you over 100 trades. I will first tell you about the indicators we're going to be using, show you a few examples, and then perform the 100 trade backtest. This strategy involves two trading indicators, the exponential moving average and the repulse indicators. So guys, if you want to support this channel and receive exclusive access to all the strategies we have backtested so far, please check out our Patreon's page. We also have a Discord live chat, which you can use to ask any questions to the community. The first 30 people joining the middle tier will automatically have full access to the top tier at no extra cost, allowing you to send a strategy for me to backtest. I will create a video similar to the one you're watching and present everyone with the results. So please consider having a look at the first link in the description, and I hope to see many of you in the Discord community. So an exponential moving average, also called EMA, is a sort of moving average that gives the most recent data points more weight and relevance. The exponentially weighted moving average is another name for the exponential moving average. An exponential moving average reacts more strongly to recent price movements than a simple moving average, also called an SMA, which gives all of the observations in the period identical weight. The repulse indicator is used to determine sentiment. When the repulse indicator is trending upward, it reflects increasingly positive bullish sentiment, and when trending downward, it reflects increasingly negative bearish sentiment in the underlying market. It can be used to determine a strong change of trend by overlapping repulse indicators of varying timeframes, such as 5 or 10 periods. When the fast, shorter period crosses the slower, longer period of the repulse indicator, it can be a signal of a strong directional move. So this backtest is based on the 1 hour time frame on the Bitcoin against the dollar with a rolling stop loss. So here's the strategy. We go long when the price is above the EMA and the repulse indicator is positive and turns green. And similarly, we go short when the price is below the EMA and the repulse indicator is negative and turns red. We place the stop loss at the last swing. We don't have a maximum number of trades that we can have at any given time. We have a variable risk to reward ratio due to the stop loss being at the last swing. And when the open profit reaches 1R, which is the amount we are risking per trade, we move the stop loss by 1R in the direction of the trade. So let's get on the charts now so I can show you a few trades, and then we will dive straight into the 100 trade backtest. All right, so here we are on the charts. We've got the Bitcoin against the dollar chart open on the 1 hour time frame. So let's add the indicators. So the first indicator is the exponential moving average, and the second indicator is the repulse indicator. As you can see, I'm selecting the one from Everget. So we'll go ahead and change the settings. So the settings for the EMA is 480 period. We'll change the method to EMA, and I will change it to white. And the settings for the repulse indicator is 24, the length of 24. So there you go. You've got the two indicators set up. So we go long when the price is above the EMA, the 480 period EMA, and when the repulse indicator is above the 0 line, so when it's positive and it turns green. So for example, right here you would go long, here you would go long, here again, right here, there, and then similarly you would go short when the market turns. So when the price is below the EMA and the repulse indicator is below the value of 0 and it turns negative, so you would go short right here. So let me show you a few examples of trades, and then we'll dive straight into the backtest. So here are a couple of examples of trades. So price moves above the 480 length EMA. The repulse indicator is positive and it turns green right here. So we take a short. We place the stop loss at the last swing. So you could have either placed your stop loss at this wick or even here or there. Either way, it would have been a profitable trade. So the open profit reaches a maximum of 4.7. So the stop loss would have been moved as far as a 1 to 3 risk reward ratio. The trade would have been closed at this level. Same here, the Repulse indicator turns green again. We take a long trade right here. We place the stop loss at the last swing. The open profit reaches a maximum of 1.91, which means the stop loss would have been moved to break even. So this would have been a break even trade. Similarly, for short positions, the price goes below the 480 EMA. The Repulse indicator is negative and it turns red. So in this case here, it turned red. The last swing, I selected this. However, it could have been here. This would have been a profitable trade as well. The open profit reached a maximum of 2.11. So the stop loss would have been moved to 1R. So this would have been a 1R profit. And then similarly here, you could have taken one trade here, one there, and again another one here. Either way, these would have been profitable trades. So let's go ahead and perform the 100 trade backtest, and I'll see you for the results. Alright guys, so here are the results on Bitcoin against the dollar. We had a maximum drawdown of 27% on the account. We were risking 5% per trade with a variable risk to reward ratio. We had 39 wins, 30 losses, and 30 trades that ended up in break even. And we had a maximum of 6 wins in a row and a maximum of 3 losses in a row, which gives a win rate of 56% over 198 days. So great performance, you know, almost 340% over 2/3 of the year. So if you had started with $10,000, you would have ended up with almost $44,000. This strategy is great in trending markets. The fact that we're using a combination of a trending indicator and a trend reversal indicator means that when the market is sloppy or flat, this strategy doesn't take too many trades, which affects the performance. So let me know what you guys think in the comments, and I'll see you in the next video.